The pandemic is believed to have pushed more people out of major cities and into suburbs and rural areas. According to the Los Angeles Times, California said goodbye to over 700,000 more people than it welcomed between April 2020 and July 2022. California's net move-out numbers reached a record 407,000 between July 2021 and July of 2022 alone. The San Francisco Bay Area experienced the biggest drop, which saw out-of-state entrances decline by 48 to 53%. But there's a bigger issue. California has been struggling with resident retention for 20 years. The question is, if people are moving out of California, why is it that the housing market keeps on going up? The truth is that it is hard to make a direct correlation between these trends. Logically, it seems that an overall population reduction would reduce competition within the real estate market. But we have to remember there are two main forces that influence the value of anything we buy, including real estate: supply and demand. More people leaving means less people needing homes, and that should mean less housing demand. But that's only half of the equation. There is the supply side. For many months now, real estate markets across California have suffered from severe supply shortages. There have been plenty of buyers out there looking for homes, but not enough properties for sale. This has increased competition within the housing market while boosting prices as well. Tech industries, companies like Google, Apple, Twitter, Coinbase, and Facebook are also still in California. These technological powerhouses pay very well, but many of these positions require technical college degrees. This is why the chart reveals more people with college degrees are moving into California and those with no college degrees are moving out. The shortage in supply and tech companies staying in California are two of the biggest reasons that the housing market is still sizzling hot. So knowing where these two things are going could provide us with a good video of what's to come. And here's what's happening. The tech exodus is starting. In February 2021, Airbnb announced that they moved to Atlanta. In December of 2020, Oracle announced that they moved their headquarters to Austin, Texas. Hewlett-Packard moved their headquarters to Houston. Tesla moved to Texas. Verbo, Asana, and Bungalow are all now in Texas. Added to this, California's increase in year-over-year housing production by 0.85%, building more than 116,000 new units, according to the California Department of Finance. That's a 0.1% increase from 2021 and the highest level in 15 years. These are the two factors that's keeping the housing market elevated. If it starts working towards the opposite direction, then it will yield the opposite results. Remember that the real estate market pricing is delayed. The trend of 6 months to a year ago will only start showing in the numbers now. It is likely that the rest of the year and the next year will reveal a very different story. This is not to say that you should not invest in real estate. As always, we never ever discourage people from investing. You should, however, diversify. Don't put all your eggs in one basket. Make sure that your risks are spread out and you have assets that move against each other so that if one asset goes down, you know you have another that will go up. If you're interested in gold as a way to diversify and counter the risks of your real estate investments, download the most comprehensive gold investment guide for 2023. Link in the description box. This has been Ivory Hecker for Noble Gold News. Thanks for watching.